You've been told the stock market is rational, a place of numbers, charts, and strategy, but it isn't. It's emotional electricity, a collective nervous system made of fear, greed, and dopamine. Every market crash, every rally, every economic miracle isn't about money. It's about chemistry. The market doesn't move because of data. It moves because of dopamine and cortisol, and the billionaires know it. They don't just study finance, they study neuroscience. Because once you understand how emotion shapes valuation, you stop reacting to markets and start reading the mind behind them. Let's start with a truth Wall Street never admits. The stock market is a mirror, not of companies, but of collective emotion. When fear floods the human brain, people sell. When dopamine floods the brain, people buy. Every chart is just biology visualized. Every candle on a graph is a heartbeat of human hope or panic. Your brain wasn't built for markets, it was built for survival. Thousands of years ago, that same brain helped you avoid tigers and find food. Now it's trying to trade Tesla, and that's the problem. Your amygdala, the ancient fear center of your brain, still fires the same way. Only now, it's triggered by red numbers instead of predators. That's why you can't stay calm when prices fall. You're not bad at investing, you're just a human inside a biochemical trap. When markets fall, cortisol spikes, heart rate increases, rationality collapses. The prefrontal cortex, the logic center, shuts down. The brain enters fight or flight. In that state, you're not thinking about opportunity. You're thinking about escape. And that's where billionaires quietly move in. While everyone else is running, they're shopping. They're not smarter, they're calmer, because they learn to regulate what the market manipulates, emotion. If that already changes how you see things, pause for a second and follow rich logic. Because here, we don't teach motivation. We teach mental mastery over money. Now let's go deeper into the biology of bubbles. Every financial bubble in history is a collective dopamine rush. Dopamine isn't happiness, it's anticipation. It's the brain chemical of maybe. It spikes when you think you're about to win. That's why gambling feels addictive. It's not the reward, it's the uncertainty of the reward that hooks you. The stock market runs on that same mechanism. When prices rise, dopamine surges. You feel excitement, confidence, invincibility. The same neurons that light up when a slot machine spins light up when you refresh your portfolio. You think you're investing, your brain thinks you're hunting. In neuroscience, this is called variable reward reinforcement. It's the same trick casinos use. Random wins keep you chasing the next one. So the market doesn't have to make sense. It just has to stay unpredictable enough to keep your brain engaged. That's why billionaires don't play the game the same way. They don't chase dopamine, they harvest it. They know most of the market is run by emotional cycles: hope, greed, euphoria, denial, fear, panic, surrender. So they position themselves to profit when the crowd flips from one state to another. They don't trade stocks, they trade states of mind. In fact, billionaire traders talk about sentiment the same way neuroscientists talk about neurochemistry. Sentiment indicators, volatility indexes, consumer confidence, these are just data versions of human emotion. Markets are not machines. They are collective moods. When optimism floods the system, valuations rise beyond logic. When fear takes over, everything collapses. And when calm returns, the cycle starts again. A biochemical pendulum disguised as economics. Here's the hidden truth: the market doesn't reward intelligence, it rewards emotional discipline. In neuroscience, that's called emotional regulation, the ability to recognize your chemical reactions and not act on them. Billionaires train for this like athletes train for reflex. They study behavioral finance, neuroeconomics, and even meditation, not for peace, but for pattern recognition. They know that panic is profitable for those who don't participate in it. If you're beginning to realize this, like this video and subscribe to Rich Logic, because we decode the mind behind the market. And once you see it, you'll never look at price charts the same way again. Let's dig deeper into the chemistry of herd behavior. Your brain is wired for social survival. That means you take cues from others, their fear, their confidence, their urgency. It's called mirror neuron activity, the biological basis of empathy and imitation. In markets, it creates contagion. When others panic, you panic. When others celebrate, you join. That's why bubbles expand faster than logic can explain, Because they're not built on numbers. They're built on neurons sinking in mass delusion. The crash isn't the tragedy, it's the cure. The poor and the middle class try to predict markets. The rich try to predict emotion. They know markets are lagging indicators of mood. The emotion always happens first. When the crowd feels euphoric, the rich quietly sell. When the crowd feels hopeless, the rich quietly buy. That's not luck, that's limbic literacy. The limbic system, the emotional core of the brain, is the true market maker. Every price swing is a heartbeat of collective biology. When enough people share the same fear or euphoria, it becomes visible on the chart. It's not a mystery, it's math written by molecules. And those who understand it don't fear volatility, they read it. Let's talk about how technology has changed the brain-market relationship. Social media, real-time news, instant trading apps. They've accelerated dopamine cycles. Markets now move at the speed of emotion. Algorithms read your behavior faster than you understand it. They see panic microseconds before it happens. They amplify trends, magnify reactions, and compress entire emotional arcs into days instead of months. So volatility isn't an accident, it's engineered. The market has become a neurological feedback loop. Your fear creates data. Data fuels algorithms. Algorithms mirror your fear back at you. You're not trading anymore, you're being traded. That's why billionaires stay above the noise. They understand markets are no longer about fundamentals. They're about behavioral liquidity. Who's panicking fastest? Who's staying calm longest? Who's holding emotion steady while others implode? The real currency now isn't money, it's nervous system stability. The calmer your physiology, the more wealth you can absorb. In neurofinance studies, researchers found that experienced investors literally have different brain patterns. Their amygdala response is weaker during losses. Their prefrontal cortex stays active longer under stress. That's not luck, that's neural conditioning. The rich don't meditate for peace, they meditate for pattern endurance. They train their brain to stay logical when everyone else collapses into emotion. When markets crash, it's not money evaporating. It's emotional confidence evaporating. Price is a shadow of belief, and belief is just chemistry stabilized over time. So when confidence dies, the economy shrinks. When hope returns, the charts rise again. It's not the invisible hand of the market, it's the invisible hormones of the human brain. Here's something even more surprising. Governments and central banks understand this too. Every interest rate cut, every stimulus, every speech, is designed not just to move money, but to modulate emotion. When they say consumer confidence, they mean dopamine recovery. When they say market stability, they mean cortisol reduction. Monetary policy isn't economics, it's emotional engineering. And the billionaires, they study it like scientists. If this feels like you're hearing something you were never meant to, take a moment and subscribe to Rich Logic. Because these are the insights that transform you from participant to observer, and from observer to player. Let's close with the secret that ties it all together. The stock market isn't a system of numbers. It's a living organism made of emotion, expectation, and reaction. It's not the economy, it's a mirror of how people feel about the economy. And that's why billionaires stay detached. They don't fight emotion, they let it run, then profit from its rhythm. They understand that human emotion isn't a flaw in the market. It is the market. And those who can master their inner chemistry master the external economy. So next time you feel fear during a dip or euphoria during a rally, pause. That feeling you're having, that's the market, moving through you. It's not personal, it's biological. And the moment you stop reacting to it, you step out of the crowd and into control. If this episode opened your mind, like this video, subscribe to Rich Logic and share it with someone who still believes money is math. Because the truth is simple, money is emotion measured in time, and the people who control emotion control the market.